Morning, Fractal Effects team. Please make sure you read the disclosure. If you're following along with us today, make sure you're doing a demo account, as this is for educational purposes only. We are not financial advisors, and this is not financial advice. Today is CPI day, so we will only be going over specific concepts. And we'll see how this session goes. We might be introducing more of these in the future where we go live earlier. Obviously, it won't be on CPI and PPI day. Unfortunately, that's today and tomorrow. So we will use today to kind of go over some early entry models. And then going into next week, we might start utilizing the morning session. But we'll see how it goes. 3 minutes until New York Open. Let's jump onto the charts. So we've outlined a couple of things. Obviously, like I said, today was CPI day, so you have that news drop right here. Let's see if that gets filled in at open. We've laid out a fib from London low to current market price. Obviously, the New York session hasn't formed yet. And our early entry model, which again, the same dates that are recommended to avoid for the spotlight strategy are the same days you want to avoid across the board. So today is CPI. This is a low probability day for any setup. I'm not saying you can't find some, just low probability and much, much higher risk. So right now, our early entry is all the way down here, actually, this fair value gap. We'll go into more detail of how we outline this. It's already on the Learning Hub. And in the next iteration of the indicator, this option will be there. It will be outlined for you. But right now, this is the fair value gap of interest. On days where there is no news, or at least heavy news like CPI and PPI, we utilize this range along with the expansion model and what we call a buy and sell model. They don't always have to line up. You can have a buy model and have a downside expansion model, or you can have a sell model and an upside expansion model. And we go over that again in the Learning Hub. We'll see if we can cover some of that going into next week. But obviously with CPI news, we shot right past that zone. That entry would have been, and this is, we don't really recommend even looking for this entry until after 8:30 Eastern Standard. So it actually tapped. You can see that it actually tapped it. There's the zone. That's why it's a very, very powerful zone, not to mention along with the EMAs. And it tapped it with the news itself. So when 8:30 news dropped, it tapped that zone, and then it took off. And now we have this big news gap, and our 5 MB is what we call this. Our 5 MB is sitting between 71% and 79%, still in the golden zone, but as mentioned before, days like this, we do not trade actually. Anybody who tries to trade New York Open, which is, again, this candle right now, it's risky unless you have a game plan. Even this strategy, we recommend that you wait for the 940 candle. Could be a little, it could be 935, 940, but we want to see either one of those candles pull back into our golden zone. We want to see it bounce off of this zone. Some people actually do use it to trade too, again on days where market has run away, but you don't want a counter trend. And obviously the best days are where we have a upside expansion model, a buy model, and we're sitting below the 5 MB. That means we're going to push up most likely towards it. So right now London has swept Asia lows. And we have a slight upside expansion model. We have a buy model. And then there was your 5 MB, but not recommended you trade on this day. I've had it in the past. I've actually had students and users message me that they caught the news right off the 5 MB. And as mentioned before, do not brag about these things. That does not mean it's going to happen always. It is a very powerful line, very powerful zone, but it does not mean that you're going to catch it all the time. This is actually, I personally did not even look at this until we just logged on. That is very interesting that the news candle bounced right off of it and right off the 20. A lot of points of confluence there, but there's no way to catch this. That's a very fast moving candle. That's a big 5-minute candle right there. So New York open. Not a lot of movement, surprisingly. We've taken out previous day's highs. Again, nothing here really to take advantage of. No real pullback. This is not a market I would sell. Now again, you want to line up all your confluence. If you have a buy model, an upside expansion model, and you're sitting well above the news, the goal is to see price return back to the news gap. And again, this is just an example because we don't trade days like this, but you want to come back to at least some point of fair value and look for a buy. Or wait for the DR session and see which side you get your confirmation on. And even for the spotlight strategy, we don't trade CPI and PPI news. And this is one of the reasons we avoid the indices or any US related assets during this time. Look at this massive push up without any real pullback. Still on a tear, still going. So we've taken out the weekly range already, pushed right through the high. There's our New York fair value gap that's forming. Huge upside expansion model. If it was any other day, we would again wait for that retracement or just wait for the dust to settle and then a confirmation to be had at 10:30. Even for a CPI day, this is actually very erratic. That New York Open actually surprised me. I thought we were going to get a bit of a pullback before any kind of big push up. Now we go over specifically the buy model. So you have your buy model, your sell model, and then we have a ranging model. Very similar to the contraction model, where market just keeps going back and forth, taking out liquidity. And usually those are days where you don't have any big news drivers. It's good to see these examples though, if nothing else, just for a deterrent to show you why you avoid this. But yeah, the early entry model, we wait for 3 points of confluence. First, once we actually verify what model we have, buy, sell, then we use the expansion models, upside, downside. And then what you want to do again is pair those. You want to make sure there's confluence there. And then eventually we want to see a retracement back into our 5 MB. And we want it to line up with our our bigger range fib here. I usually call this the London fib, just because we do it from London low to market price. And this is supposed to be a relatively quick move. You catch it between 9:30 and 9:40. It could come back and possibly, if 9:40 hasn't tapped that zone and 9:50 does, between there it's fine. As long as you see all those rejections. You see 5M rejections off of that zone, it's a good indication that you're going to be heading up. And then all we do is obviously aim for the highs and or lows, equal relative highs and lows. But as mentioned before, these are days we avoid regardless. We have US 30 here on the right just as a comparison, just to show you where its 5 MB is. There's the 5 MB. We shot below it. We had a downside expansion model. So this is an example where certain things differ. We have a downside expansion model, yet at the same time, we have a buy model. So in a buy model, we usually go down to go up. Sell model, we go up to come down. But obviously we go into more detail in the Learning Hub and break down exactly the specifics of how that works. But there's your 5MB. We had 1 candle, 2, 3 before it pushed up. So first you see a break above it, retest of it, come back up. But this was obviously super early, 310. And then the market took off after that. We haven't seen it come back. On a CPI day like this, I'm very interested to see if it actually comes back and uses that as its TP on the move down. Not a move that we like to use specifically. It's good to see. This is the news gap for US 30. So now we're back at the news gap, bouncing off the midpoint, consequence encroachment. This is where most people look. For the people who trade news, which again, we avoid and we recommend you avoid, they'll look for a retracement back to the midpoint of these news gaps, close to 50%, 61%, and then look for a buy. Right now we're red on the 1, red on the 4 hour. So even the higher time frames are mixed. But that's one of the reasons we do not trade CPI and PPI day. I wanted to go live this week specifically at this time just to show you guys the difference. And we'll have more of these days. We will not be going live early tomorrow just because it's going to be a repeat of today. Tomorrow's PPI. But I wanted to show you the difference of how this move varies during news days and non-news days. Obviously low probability on news days, you want to avoid it altogether. But it's very interesting to see some of this. So even though we had CPI news drop today, it actually hit our zone for NAS. And the one thing we don't like to do is encourage people to actually jump in on days like this. But this is really a good indication of how powerful this zone is. You're looking at the 5MB, this line. And as mentioned before, in the next iteration of the indicator, or we'll probably make its own indicator just for the early move. Both will be available obviously through Fractal Effects. They're exclusive for TradingView. But it'll outline everything for you, so you won't have to actually eyeball and try to see if it's, if you have a buy model or a sell model, it'll outline it for you. This is a buy model, this is a sell model, and then here's your 5MB. And the only thing you'll have to do is draw out a Fibonacci, and pair it up. So NAS still on a tear upwards. US 30 filled in the news gap. And same, we had a buy model, but we have a downside expansion model. What you want to do is you want to line them up. When you have mixed models like this, it could do both. It could sweep both sides, and that's why the 5MB is used as either an entry or a take profit. But again, it has to correlate with your bias. If our session bias and our daily bias are bullish, for example, in an example like this, I would never use the 5MB as a take profit. But we do have a downside expansion model. Meanwhile, at the same time, we have a buy model. Right now, we're pushing down even further on US 30, heading towards that golden zone, filling in that news gap. Also, the early entry model we use on the indices on non-news days. We haven't fully back tested it for other assets, but feel free to. It's just when you have the volatility of the New York Open, primary focus is usually on NAS, US 30, S&P. US 30 pushing all the way through now. NAS not really offering up anything at all. Again, NAS just on a complete tear. US 30 now cleared the news gap at 61%, right at London's fair value gap as well. Let's see if it pushes down, makes it to the 5 MB. I believe we do have crude oil inventories as well today. Yeah, that news drops at 10:30 Eastern Standard. So US 30 bounced off the top of the weekly range after sweeping out yesterday's highs. This thing could just crash down. And this is why when we have this mixed model, why you can expect something like that. So when you have a buy model, but then also a downside expansion model, that means you could actually clear some higher time frame PD array, premium and discount array. For example, in this case, we took out previous day's highs, and then immediately it could shift to the downside expansion model and take out all the lows as well. London lows sitting down here. If London lows are swept and you see a rejection, again, on any other day, you want to avoid this trade or any kind of trade setup today. We're just going over some educational material. But if by 10 o'clock you see London swept and a candle close above the 5M, you can take that and still stick with your higher time frame bias. In this case, we actually have a bit of a mixed bag, but very interested to see what it does here. Looks like it's making its way all the way down to the 5 MB. We are at the 61-71%. But we have all these equal relative lows sitting down here. I'm sure we'll sweep those before moving or making our next move. That's primarily what we wanted to cover. So this indicator hopefully will be done in the next week or so. Currently for the early model, it was all manual markups. It's really just two areas you have to kind of go over, make up your mind, see the pattern, recognize it, buy, sell, match it up with DR. The dealing range itself that you're looking at, the expansion model, I should say. And once you have your bias, then you just wait for market to come back into the 5 MB, literally, just a fair value gap. Here comes US 30. Again, not a coincidence that it's coming back to this powerful zone. We will most likely see it sweep London lows, and if I see it close above this, then we'll most likely shoot back up. That's how we use the 5MB in correlation with the buy or sell model. Once you have your mind made up of what direction it's going to go, then we obviously use the Fibonacci, and ideally we want to see our zones matching up with the Fibonacci itself. Here we're at 88%, and not a coincidence that we're back to the same zone. Right into it. Now I want to see US 30 be swept, and if the next candle closes above here, doesn't necessarily have to sweep London lows, but you never come this close and not sweep it. You also have another powerful zone right here, which is the weekly range itself. So we'll most likely sweep, and then I want to see it close above this and above this if we're going to be bullish, I mean. And if it was any other day, not CPI, PPI, or heavy news day, this would be an optimal trade setup. Once we see it, if you see it sweep, close above this, that's a good indication that we're going to be going up. If it closes below this, and then you see a lot of wicking happening on this side, then it will continue to push down. This is a very powerful zone. Any wicks that happen from here, any rejections that happen from here, you match that up with your bias, and you got a good trade setup. Obviously, we drop down to a smaller time frame to look for an entry, and those entry models are again covered in our Learning Hub, and even more information on how this works. And the next, so the next iteration, not the next iteration of our indicator, a secondary indicator that we're creating just for the early move will outline the zones to let you or help you understand if it's going to be a buy or sell model. And then it will paint out the 5MB for you, this fair value gap, this zone. So now we've swept London lows. We're red on the 1 and the 15, but not the 5 yet. And that's why they use one of the reasons we avoid CPI and PPI days, because they use heavy news days as smoke screens to reprice the market. This move, there's no way CPI news would have pushed this up that high. This is just their opportunity to reprice the markets. And still going. So now we are below the 5MB. . 5 MB. 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 We've swept out London lows. But this is the zone. This is the zone of interest. If we see candle close and then another candle come back up here and wick this, whatever side the wicking happens between 9:30 and 9:50, just that 20-minute zone, whatever side you see the wicking happening of the 5 MB, as long as that matches up with your expansion models and your buy and sell model, then you got a good directional bias. Then it just all depends on getting a good entry. We're already at 10 o'clock. If you're not in a trade setup by 10 o'clock, then you abandon the early entry model and you concentrate specifically on the spotlight strategy. So we'll have a range formation in the next 30 minutes. And then we wait for confirmation, retracement, and extension. Obviously, today being CPI, we'll avoid all US assets. If we do get a confirmation on any foreign pairs, we'll take a look at that. Obviously, even oil is affected today. Crude oil inventories that will be dropping in the next 30 minutes. We'll take a look and see what kind of news that is. We'll see if that's actually a big wick or if any of the bias, if any of the confluence is there and it matches up with our daily and our session bias. But yeah, today's an all-around volatile day, a day you want to kind of avoid in general. Sleep in, don't even bother. But it's a good day for education. So now here's our next candle. I want to see if we wick our 5 MB zone to the downside or the upside. As mentioned before, this day, because of the volatility, we would not be trading at all. Even in a demo account, there's no point. There's no point in practicing entries on a volatile day. But again, we're using this as just an example, just to show you how powerful these zones are. We had a bounce off of it, which created the biggest push of the day for US 30. And then we had a retracement right back to it, which is probably the second biggest push of the US 30. Here on NAS, the move took place a lot earlier. So we had that at 5:30. News dropped right into it, wicked it, didn't go any further, and had the biggest push of the day. That is to show you how powerful the 5 MB is. Again, we have more information in the Learning Hub of exactly what it is and how it works. And then the indicator will be coming out most likely in about a week. That'll paint this out for you. Even on a volatile day, they still use these zones. So we're getting a wick off of it now. $10.05 wick. Let's see if we push through. Now that we've cleared out these equal relative lows, swept out London, a lot of equal relative highs sitting up here. But obviously we're past 10 o'clock. You only want to use this zone until 10 o'clock. That's it. It's still a strong zone. It can still work later, but you're better off than focusing on the spotlight strategy because you already have your range formation almost complete. The next 20 minutes, this range formation will be complete, and we switch over to the spotlight strategy completely. We can still leave and watch this zone, and if it obviously lines up with confluence with our spotlight strategy, then we utilize it. Two minutes left. We're getting a rejection, but have to wait and see. Nas still on a tear. If I'm not mistaken, I think we might have even are we at all-time highs again? I believe we are. Nas back at all-time highs. All from CPI News. Bounced off a daily fair value gap and just kept going. Yeah, Nas is just on a tear. This would have been an interesting area on any other day to look for an entry. And then obviously our 5MB had bounced off at 8:30. I have seen candles as early as 8:40 bounce off the 5MB. But again, it just depends. Obviously, news candles you want to avoid altogether. You don't know how far they're going to extend. Could have even dropped this far, 100 pips, 200 pips, and then closed above here. So we got 7 seconds left. We're wicking off this zone. If this next candle fails to get above the 5MB, we might just get a bearish day altogether. We now have a crossover of the 20 and the 50 on the 5. By the way, at any point, a candle, if you're within the time zone, and again, if it's the right confluence, if you get a candle close and a candle rejection, it's a good indication that it's going to push up. Being a very powerful zone, you'll rarely see a lot of manipulation happening here. You'll see a lot of wicking happening, but if you're smart enough to actually see which side everything is wicking on, then you shouldn't have any issues. For example, US 30 closes above the 5MB. There's a good chance that it could just keep pushing up and take out the equal relative highs up here. That's why this is such a powerful zone. Think about it. Even on a highly volatile day like today, we bounced off of it, created the biggest push of the day, and then we retraced right back to it. And now, in about 3 minutes, we'll get a candle close, and it could actually initiate the next biggest move, which could be taking out the equal relative highs of the US 30. Again, if it was any other day, we'd be actually watching this in interest, but CPI, PPI day, you want to avoid trading altogether. We're just using this as an educational model right now. But look at that candle. We dropped right below it, swept out lows, and then immediately the next candle, the next couple of candles were already above the 5 MB. For the US, for NAS, the biggest push of the day happened after the CPI news dropped at 8:30. And where are we wicking off of? The 5 MB. There's your 8:30 candle. It did not go past the 5 MB, right off the 20 EMA. This is not a coincidence. This is a powerful zone. This is why we use this for our early entry. Obviously, we don't use it on news days, even though I've seen it bounce off of that many, many times during news days. You just don't want to take the chance. But there it is, the 5 MB. That's the early entry model. And we'll be creating an indicator that'll be done by next week, and that'll have the 5 MB painted out for you. It'll have your your buy and your sell model zones already kind of painted out, so you can see, hey, it's a buy model, it's a sell model, line that up with your expansion models, and you have all your confluence. We want this to be as easy as possible. Our goal is to make this color by numbers. Literally. Up, 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 green, 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 buy. It'll be simple as that. Buy model, upside expansion model, green across the board, rejection off the 5 MB in the right direction, you're good. You can take it. Obviously, we look for a better entry on a lower time frame. 44 seconds left. Now, if this candle closes here, this would be an interesting place to actually start looking for retracement back into this zone. Obviously, we're sitting at 10:14. So we've abandoned the early entry model. I would rather wait now for the spotlight confirmation. The NAS is just on a tear. Very, very overbought. US 30 looks like a better, again, on any other day, would have looked like the better model. If this candle closes above 5 MB, we could see this go back up. But again, CPI day, very, very volatile. A lot of manipulation happening on CPI day. That means even when you're models are correct on CPI day, they could just pull the rug out from under you because they feel like it. Again, this is all an algorithm. Two minutes, 47 seconds left. I'd like to see it tap. Hasn't tapped yet. Could take off from here. Again, that's US 30 on the right, Dow Jones. Nas on the left, which I think has left the building. Where is it? Yeah, you're not catching no Nas here today. And obviously, they drive it up this high, and then most likely what they'll do is, like even your retracement now, would have to be a deep retracement to get all the way to 71. Since we've cleared out all the liquidity to the upside, it could reverse here. There's nothing to go for. Now it's just creating all-time highs. For anybody who trades news and anybody who knows about these zones, now the 5 MB, that's a very very specific zone. So 5 MB, that's a zone that we've coined. It's based off of a lot of specific back-tested data. Again, not a coincidence that we bounced right off of it here, here, drew back to it, and now let's see if we get a secondary push from it. We are red across the board. And we do have a downside expansion model. But we also have equal relative high sitting up here. And as mentioned before, this is a very powerful zone. If we get another candle wicking off of this, I'd like to see this head back up. Going against the grain, obviously. And as far as Nas is most likely setting up for a pullback, just because there's nothing else left for it to sweep. It's already taken all the liquidity to the upside. And there's our tap. Did we get a tap? Let's zoom in. Not quite. There you go. Again, very powerful zone. I want to see if this candle closes above. It can wick. I want to see a candle body close above. You'll most likely see a push to the upside for US 30. So that's the third bounce off of that zone. One minute 44 seconds left. I want to see if this stays above 5 MB. And if we just continue to drive up. At least back to midpoint. We might get some rejection here. As that's the inverse fair value gap of the news. So we might get some rejection here, but ideally I think we will most likely take out these highs. But even there would probably be would have been a 1 to 3. A little under. My apologies. When you're trading, obviously you should have multiple alerts set up on your phone, not only through TradingView, but just even time-wise. I know exactly when it's 10:30. I know exactly when it's 9:30, 9:20, 9:50. For these early entry models, you got to know exactly what time it is so you can zoom in on a specific zone. So you know that, hey, I'm looking for this to happen in this area. NAS, again, just still sitting up there. So we primarily covered everything we wanted to today. Just wanted to go over the early entry model. We might even conclude early. We might not go all the way into the spotlight session just because, again, today is CPI day. These are the days we want to avoid. We do usually switch over and look for some foreign pairs, but unless we get one in the next, let's say 10 minutes, we'll most likely conclude this session early. We just wanted to watch New York open and go into our early entry model. And I'll recap at the end of all this for anybody joining us late. US 30. Now this is obviously a high resistance zone. It's got to push past the EMAs. We have one of our session fair value gaps there. It's got to get through the news drop that happened. That's the fair value gap outlined here. That's why, again, I'm not sure I'll get past the 50%, the consequence encroachment of the news, the inverse news gap. But I'd like to see it to come at least all the way up to here and then potentially take out these highs. But it's mostly just to outline how powerful our early entry model like zone is. We'll recap after, but as volatile as both of these were on one of the most volatile days, news days, we still got reaction off of these zones. And that's not a coincidence. As mentioned before, this is backed by data. 20 years of aggregate. Still pushing. If this was any other day, I think we would have already reached 2R and been in a safe trade. Yeah. Would have already reached 2R. The hopes of getting up. As soon as the zone was tapped. So again, if it was any other day, not CPI news, you would have already been in a safe trade. We're just going to go over our early entry model. So there's our zone, and the next iteration of the indicator will have this painted out for you. But even with the one of the most volatile news days, there's your 8:30 candle, your news candle. It tapped our fair value gap right there, that little white line that you can see. Reacted off of it, off the 20 EMA, and took off, and that created the biggest move of the NAS to take out all-time highs. Now this happened obviously way earlier, and obviously on a day where we avoid trading, but this is just an example to show you how powerful these zones are. On US 30, we bounced off of it, creating the biggest up push for the day. We rejected, and it came all the way back down, created the biggest down push for the day so far. And then we bounced off of it again to the upside. And now we're stuck between rather two powerful areas. You have the 5MB, and then you have our EMAs, and you're red across the board. So again, that would have been counter trend trading, but this is just to show you how powerful this zone is. And even this actually technically gave us a safe trade, where you would have been in a safe setup right now, even if it hits your stop loss. On any other day, you would have still been able to eke out a 2R, taken some off the table, moved up your stop losses. So this would have already been a safe trade setup. So that's how powerful the early entry model is. We will be utilizing more of these sessions to kind of go over this. We won't be doing it tomorrow. Obviously tomorrow's PPI, so it's going to be no different than today. Very volatile, no point. But I wanted to show you specifically on a CPI day, on a heavy news day, that these zones are still intact. They're very, very powerful zones. That's not a coincidence that the news candle, the 8:30 news candle, bounced off of it and created the biggest push of the day. That's not a coincidence that US 30 bounced off of it to create the biggest push and then retraced back to it and then bounced off of it again. I'd like to give it a couple more candles, see if we get up here, or if this actually just comes back down and breaks even. Again, it was a counter trend trade. Setup, I should say. This is not a trade anybody would have taken on a regular day. This is just specifically for educational purposes. Don't ever mess with CPI or PPI. I don't care if you think you have a strategy. I don't care if the fact that these two, again, followed in suit. Doesn't matter. Do not mess with these days. I'm sure we'll get another wick, but I want to see price stay above the 5MB. Equal relative high sitting up there. Everything to the downside's been swept. But once you pass 10 o'clock, we stick to the spotlight strategy and we abandon the early entry model. We use this in conjunction with our confirmation. So for example, if we were to get a bearish confirmation and it drew back and it rejected off of here, very, very strong zone. And it would most likely continue pushing down. Right now we've rejected off of here, had a push to the upside. I still think we'll go after, even though we're right across the board, just because today is so volatile, I'm sure we'll go after these equal relative highs. But maybe not before one last swipe down, but we'll see. That would have been the TP on any other day. The midpoint of the news gap, which gives you a little under 3. So we'll give it a couple more candles. I want to see where this goes. NAS, as mentioned before, has left the building. It's going to gesticulate here, and I'm sure it'll come back down, fill in the news gap. It's already swept. We're at all-time highs with NAS, so it's already swept all liquidity to the upside. The only other liquidity is sitting below it. But it could just gesticulate back and forth and close off here today. Who knows? But there's the news gap left by CPI. There's the news gap left by CPI. Ideally, I'd like to see this come back all the way up to here and push through and take out those equal relative highs. But we'll see. Again, right across the board. On any other day, we would just stick to the confluence, but this is just to showcase the early entry model and show how powerful this zone is. So tomorrow we'll be doing regular session, and then going into next week, depending on the news, still have to take a look at the economic news calendar, but depending on the news, we might utilize more of these early sessions. And hopefully by that time, our indicator is complete, so I don't have to paint these zones by hand. The 5 MB, and then the buy and sell model. Those will be boxed out. You just have to take a look. And it's as simple as, is this box higher than this box? And it's literally that simple. And you just have to kind of take a look at exactly what direction those boxes are going. And then you know. Then you match it up. And you match up your buy model with your upside expansion model, and then your 5 MB. For anybody joining us late, again, even on a CPI day, we bounced right off of our fair value gap, our 5 MB. We already knew it was going to be an upside expansion model. We knew that we had a buy model. And then obviously, we don't trade CPI day, but just to show you how powerful this zone is, literally the news candle bounced right off of our fair value gap, 5 MB. Same thing with US 30. Bounced off the 5 MB much earlier. Obviously, this is around 3 a.m., I believe, or no, 6 a.m. Eastern Standard to create the biggest push of the day, only to come back and retrace to it, only to bounce off of it again. This is not a coincidence that we're bouncing off the 5 MB. The only thing is it's a high resistance day. You're red across the board. You wouldn't counter trend trade this, you know what I mean? So even though our entry models haven't matched up, I'm just showing you the power of the 5 MB. This is not a coincidence that we pushed from here, drew back to here, and now we're gesticulating from here. There are people that use this specifically. We've gotten messages from people that use this just to pass their prop accounts. They'll wait for a bounce off of it, ride it, set it for 2R, 3R, get out. Because every bounce off of the 5 MB is going to be strong. And some people use it as a take profit, but again, that's only if it's in the direction of your bias. You're heading in that direction anyways. You want to see what happens from here. You don't want to necessarily trade to here. I don't recommend that. Give it 2 more candles. We'll conclude about 10 minutes. Then we'll be live tomorrow, but again, regular time. And then going into next week, we'll utilize some of these early sessions. Guys, make sure you check us out on fractaleffects.com, where we teach high probability trading, 75 to 80% accuracy. Please make sure you hit the subscribe button, turn on your notifications so you know when we're live. Sometimes it's a little earlier. And again, going into this next week, we will figure out exactly how much of the early entry we want to utilize. Check us out on Instagram, fractal.effects, where we're always dropping educational material. A lot of resistance in its way right across the board. Got a session fair value gap, EMAs before it gets up there. Let's see if it does it in the next couple of candles. Two minutes left. I'd like to see a cut through at least these EMAs. You're going to see another rejection off the 238. This is just what they do, especially again on days like today, to create that confusion. NAS, nothing interesting at all. It's already swept out all-time highs. Everything to the upside. And yet it is not giving us any indication that it wants to go down just yet. We're back at those EMAs. I want to see it push through this. And this is to show you, again, just the strength of the 5MB. I'm not saying it can't stay on trend and just continue pushing down. I'm just saying this is how powerful it is that even a wick off of it is going to force some kind of reaction, some movement. Since we've already swept everything to the bottom, I'm not sure if we'll get all the way up to the all-time high, the equal relative highs. But I'd like to see if we get all the way up to at least midpoint. While we're waiting, just want to take a look at oil real quick. See how crude oil inventories push the oil markets. There you go. That entire drop right there is all because of crude oil inventories news. And it confirmed bearish, even though I think we have an upside expansion model. Yeah, looks like it. Upside expansion model, and this could have right between 50 and 61%. I think we'll drop all the way to the orange here, the 238, and then push back up, if not from here. That was close enough. I think we'll get a little bit more of a dip. It's worth looking at more than NAS right now. NAS is a waste of time. See again, we're just going to gesticulate back and forth. They're trying to build More liquidity here, engineer near liquidity. People going long from this zone, people going short off of the EMAs. I'd like to see it get all the way back up to this midpoint. Let's see if we can do it in the next candle or two, and then we'll conclude the session. Again, for people that are messaging right now, telling me they got in on this move, please don't. This is not a day that we trade. This is not something I'm going to be proud of. This is completely against the grain. But again, just to show you the power of the 5MB. I'd like to see it at least tap the midpoint. Not sure if it will in the next couple of candles, just because we got the 238 there as well. Probably want to bounce off the 238 one more time, a couple more times. But this would have been a safe trade setup on any other day already. Because you've already went past 2 or so we'll at least get up to 238 right here. Anyways, we'll conclude the session as soon as we tap the 238. Not sure if we'll make it all the way up there within the next candle or two, but for anybody joining us again, please check us out on fractaleffects.com. Hit the subscribe button, turn on your notifications. And going next week, depending on the news calendar, we will be live at New York Open. So we'll most likely get a reaction off the 238 off of here. Another push down. We got another fair value gap in there. And then slowly eke its way up to this midpoint. US 30 on the right here. And oil, again, we hit the 61%, even though we got a bearish confirmation. This is an upside expansion model. We're at the 61, might come back down and hit the orange, the 238, but this thing will most likely push back up. Heavy news day today, guys. CPI, crude oil inventories, tomorrow's PPI. Proceed with caution. Do not trade these days. This was just our opportunity to kind of show you the strength of these zones of the early entry model. So for anybody who was following along with us and even potentially utilizing a demo account, you can see that it would have been profitable regardless. And even NAS, I just wanted, before we log off, I'll show you guys one last time. NAS bounced right off of our zone. Even the news itself, CPI news, bounced right off of our 5MB fair value gap. Right there. Wicked it. And then went in for the biggest move of the week even. And US 30 hit it 3 times, drove up at 6 from it, drove back down to it, bounced off of it at 10 o'clock, and now we'll most likely tap the midpoint of that consequence encroachment and maybe even take out these highs, but that's as far as we're willing to forecast. So again, guys, thanks for joining us. We'll be live tomorrow, regular time, and then going into next week, we will evaluate the early entries and possibly going live at New York Open. Thanks for joining us. I'll see you guys tomorrow. Take care.